Oh, okay. There we go. Tim Quast. Oh, I forgot to bring him on. There he is. Tim Quast, Market Structure Edge. Tim, good morning.
Good morning. That was actually a pretty good Dennis
Thank
impression
you.
that you did
I
there, Spencer.
spent
And
the weekend working on that.
he's got some competition.
Yeah.
Yeah.
Now you know. Now you know what I did with my Sunday. Tim, how
Good to
was
see you.
your week? How was your weekend? What's on your radar this morning?
I'll tell you, it's been busy. The weekend, of course, was highlighted by a Benzinga boot camp, that's a delight to me because what I despise is when the weekend comes along and interrupts my work and my focus on market structure. So I was delighted that I had a chance to yammer on about market structure on a Saturday.
The weekends are just inconvenient. So, all right, tell us.
You want to go to 7-day? You want to go to 24/7 trading?
That's right.
Is that what you want, Tim?
Right. I think this sitting around enjoying the weekend, that's got to stop. That's
Well,
counterproductive.
get dirty in Bitcoin then. Roll up your sleeves and get in some Bitcoin, and you can trade all. You could. How would you do a market structure on Bitcoin?
Well, we would need a massive government regulatory overlay before I could do that, because the math of market structure, and I'm a libertarian guy, so there you have it.
Don't get things going in the politics show on this. Okay?
That's right. So the trouble is that Bitcoin it's really a free market, so it's difficult to model fear and greed. It's very easy to model the order protection rule. That we can do, and that's what we do with market structure sentiment. We can measure mathematically what will happen if you have to trade between the best bid and offer, and there's an interconnected market that requires the bid and offer to always be separated. The bid can't be the same or higher than the offer. Well, all of that's mathematical, and Bitcoin does not have that at this point. So we would have to rely on good old human intuition in Bitcoin.
Okay. Tim, briefly summarize for us what you talked about at the boot camp on Saturday.
I will actually be brief, Spencer, which does not come naturally to me. Yes. So we talked about why at options expirations the market tends to do things that cause pundits to believe that it's the Delta variant, peak growth, inflation, and everybody wrings their hands, and then the market returns to rising. And what causes that? And the simple answer is that as large and implacable and immovable as the $50 trillion U.S. equity market appears to be, underneath it and rolling along is a $665 trillion derivatives market. And if you're going to reset derivatives, it could shudder and shake the equity structure. And people don't think about that. We can see $50 trillion of market cap. We can't see the $665 trillion particularly the part of that is over the counter of derivatives, and whether they're increasing or decreasing. Are people rolling those? Are they letting them go? And what effect will that have on how your stocks behave? And this is why traders have to have a baseline. You don't have to know all the details, but you should know that about the third week of every month, there's going to be a pothole in the equity market. And if you look at May, June, and July, all of them have one big down day right during options expirations. That's what we talked about.
When you say derivatives, I guess how much of the derivatives market is options? I mean, I'm wondering if we just, it's not the whole thing. Obviously, there's a lot of really exotic stuff out there, but we generally we use options as a proxy for the derivatives, but it's not quite the same. But how much of that is just options?
It's less than 5%.
What?
Yes, so the exchange traded options and futures markets together are, let's call it 80 trillion, but about 35 trillion of that is options. So believe it or not, as much as we focus on those,
what's the rest of it? Super exotic mortgage-backed securities? I mean, what are we talking about here?
Right, swaps, contracts for difference. Contracts for difference swaps are far and away the bulk of these contracts, and the biggest part of them are currencies and interest rates. So if currencies fluctuate, if interest rates are volatile, Those things are that will manifest. It will show up in equities because equities are being wagged by the dog. We use, we use this story of the tail wagging the dog. No, the derivatives are the dog. Equities are the tail that get wagged by it. That by itself tells us something. The trouble, the risk when it manifests is it won't be in equities because everything's awesome in equities. The trouble is our derivatives getting so expensive because there's so much effort to leverage and protect against the unknowns that the threat develops there.
Wait. When you say contracts for difference, I thought those weren't even legal in the U.S.
Oh, they're massive. Of course, they're huge. Their contracts for difference are everywhere. It is, we only see little bits and pieces of it, like we did in March when we had this Archegos Capital blow up. And when did it hit? Right after options expirations. We saw it in the data during options expirations, and we're scratching our heads. We're saying, what in the world is going on? Because things are moving the exact opposite way that they should be, and that's what it turned out to be. But they're everywhere.
I understand that contracts for difference are legal, are popular in Europe, as Vegas is saying in our chat. But I really did think that they were not legal. Maybe they're not legal for like the average retail trader in the U.S. Maybe that's
well. You would have to be an evil rich capitalist like me.
Okay.
You have to be a qualified investor to participate in those kinds of vehicles.
Okay.
But your bank is doing it.
Okay.
Your exchange traded provider is doing it. Schwab is doing it.
Okay.
Fidelity's doing it. BlackRock, you can read a BlackRock prospectus and look at all the exotic instruments they talk about that they will invest proceeds from an ETF into. So yes.
So take away derivatives market shakes that cause overall markets to shake, and don't forget that on the third Friday of the month. All right, let's talk about this week and what is on your radar as far as market structure and. We've got the Robinhood IPO on Thursday, I believe, and
which you have no data on, right? So that Tim, obviously. How do you do? Just curiously, how long does a stock have to trade in order for you to come up with a market structure profile?
Great question, Joel. 20 days. We need for good comparatives. Because that's you're exactly right. We want to measure behaviors. We talk about how price and volume are consequences, not metrics. We want to understand the behaviors behind them. So in order to do that and to develop a central tendency, what are the probabilities and the movements of behaviors that are going to impact price and volume? We like 20 days. That's what we need. Because we use 5-day increments in comparatives. And so that's what we need in the data set. Good question.
Okay.
So you asked Spencer what we're looking at. I'm going to share my screen here because there are 1,000 companies reporting results this week. It's not the biggest, but so we go from, let's call it about 300 last week as we just got into reporting seasons. The banks tend to lead the big financials. There we are on the screen. Then we hit 1,000 this week, 1,600 next week, then about another 1,000, and then we'll be into the dribbles. But this is a big week, and so of course everybody's attention is on particularly the component of the FANGs are reporting this week, and boy, if you're watching CNBC, which not that I'm suggesting that you do, you should be watching here. All the talk is about the FANGs and how they're going to do. And I like to remind traders, by the way, you can do this, traders. You can follow along. You can do exactly what I'm doing. Just put your name and email in. You don't need a credit card. Go to marketstructureedge.com. If you want, you can cut straight to app.marketstructureedge.com.
I will mention the link is in the description if you're looking for it.
Good. Okay. So do what I'm doing. What determines how stocks will behave with earnings is demand and supply. That is the essence of what we talked about in the boot camp on Saturday. And I use that sequence on purpose. You say supply and demand. Yes, we like to think of demand as market structure sentiment. So if I'm looking at airlines and cruise ships and the demand line is way below 5 and all the gains come above 5, well, I'm not buying airlines and cruise ships. And then the supply line is short volume. The market depends on borrowed stock. That's how the market works. So the confluence of those things will tell us how things will behave. So if we go here to the Benzinga PreMarket Prep July 26 portfolio with 7 companies in it, the demand line is not great. The supply line is about at trend, but the trend is up. These things are not awesome. So, what we prefer to buy, here's what I want to buy. If it was building materials, I buy a ramping demand side and a supply curve that is well below the trend. That's going to give me good gains. And that, by the way, this is where I made all of my returns in the last 2 weeks, because all the math told me that's where to be. And so that's what you look for. And it's hard to find, even though the market appears to be doing very well. If we look at these, here's the number of the companies reporting. I kept Netflix in here because it did report, and it's very telling. But you want to understand demand and supply, traders. It doesn't matter how well a company does. Lockheed Martin had very good results. How's it going to do? You always want to check. Go look at the market structure profile. What is demand? What is supply? That will 8 out of 10 times determine what happens. And if we look at Netflix, I'm just going to click on the data visuals here. Here's what was happening beforehand. The demand side was fine. I mean, it had peaked back here, but it was at 5. That's okay. But look at the supply side. The supply side was rising. If demand is flat and supply is increasing, price will go down. It's just math. And so I wouldn't, I'm not going to buy Netflix.
Could you give me a date? Could you so I could just look at it in reference to the chart?
Sure. So where I would say there would be trouble is right here, about right at options expiration. So 16th was the day when options expired, and I look at Netflix, and it's at 5, but short volume is over 50%. Over 50% of the trading volume in Netflix was coming from borrowed stock. Well, all that has to happen is for one institutional investor to go, I'm going to read Netflix's results, and that absence of demand against high supply will bring the price down. And that's what happened. So the real place to leave is when the demand curve begins to fall. So you want to leave in early July. That's where you would leave. So what if the stock went up a hair more? You would have avoided the losses. That's the best thing. That's how I think about it. And so Netflix would have told us traders, don't be in Netflix. So let's take Tesla, right? How about Tesla? Well, it's a 3-4 down, 42% short. Passive money is the lead behavior. So we don't like to buy falling sentiment. We like to buy rising sentiment. So right there, we would already know, well, am I going to buy this? Probably not. And look at it's not, here's the demand side. The demand side has not been good since June. We leave in June, or right at the confluence of June and July. Right now, sentiment is below 5. So there is more supply. The supply line is okay, but the demand side is not good. And so if stocks produce gains when they're above 5, and Tesla is no exception. So again, I don't care how good Tesla's numbers may be, and they may be very good. I'm not buying Tesla.
But last week, and I know things change, based on the market activity. But last week, when we were looking in the abyss, you were looking at Tesla as a possible lock.
Right. That's because demand was rising. Demand was rising, and supply was flat. So, and I traded Tesla. I traded Tesla on rising demand and flat supply, but I left fast. 2 days and I'm out. That's it. Okay. I'm going to, as soon as it tops, I'm out. I'm not going to battle the math. I'm not going to second guess the math. If the sentiment stops rising, I leave. And it's because
how soon after the close
I'm not smart enough to outthink the math, right?
How soon after the close do you get your new readings?
We get them about 11 p.m. Eastern time, but it doesn't matter. All I do each day is at about 6:30 Mountain time, 8:30 Eastern time. I'm gonna look at my data. It'll all be. I don't spend a lot of time thinking about it. I look at the data. I look at the things that I've been watching, and I make decisions. Then, based on what's happening in the futures market, I do look at it from this standpoint. It will help me determine whether I exit very early or later in the day. And you guys are expert traders. I'm less expert as a trader. I'm very expert in market structure. But I'm going to look at those things, and then I'll determine it. And and I use marketable trades more than limit orders, because I don't want to tip my hand to anyone. I know how much of everything I can trade before the price changes, and I'm going to be under that. So if I'm buying and selling Tesla, I'm going to buy or sell less than $29,000 of it at a time, because I want to be where I know my broker is going to have to fill my trade at the best price or send it to somebody who will. I'm not going to put in a massive order that is going to tip the hand to everybody.
Tim Quast is the founder and CEO of Market Structure Edge. He joins us every Monday for Market Structure Mondays, giving us some trade ideas for the week. This week, not so bullish on Tesla. We'll find out how he did next week. Tim Quast, always a pleasure, sir. Oh, before I let you go,
Yes.
please stay safe. I heard there are some fires out there, so please stay away from the fires.
We're doing okay, and we're actually headed to the Finger Lakes tomorrow up in upstate New York. So
my parents were just there like a month ago. I've never
is that
been,
right?
I've never been to that area of New York, but I hear it's beautiful. So
we'll report back. I'll give you a field report when we're back next.
All right.
Okay.
Glad you're away from that fires. Have a good one, Tim.
Thanks, guys. Have a good week. See ya.